Look at this chart. If you're a beginner, it looks like absolute chaos, just a bunch of random red and green blocks with weird little lines sticking out of them. It's enough to make you want to close your laptop and walk away. But what if I told you that every single one of these shapes is telling a highly predictable story about human emotion? And what if you could decode that story in less than 9 minutes? Welcome back to the channel. Today, we are stripping away the complex Wall Street jargon. I'm going to show you exactly how to read candlestick charts as easy as 1, 2, 3. No complicated math, no overwhelming indicators, just a simple 3-step formula you can use on stocks, crypto, or forex today. By the end of this video, you won't just see shapes, you'll see exactly who is winning the battle between buyers and sellers. If you're ready to master the ultimate trading foundation, hit that subscribe button, and let's jump right into step number 1. Step number 1 is mastering the anatomy. Every single candlestick on a chart represents a specific period of time. It could be 1 minute, 1 hour, or 1 full day. But regardless of the time frame, every candle hides 4 crucial pieces of data: the open, the high, the low, and the close. We call this the OHLC. Let's look at the solid rectangular part first. This is called the body. The lines sticking out of the top and bottom? Those are the wicks, sometimes called shadows. Think of a green candle as a story of celebration. It means the price went up. Because the price grew, the open is always at the absolute bottom of the solid body, and the close is at the absolute top. Now look at a red candle. This is a story of a sell-off. The price went down, so the rules flip. The open is at the top of the body, and the close is at the bottom. But what about those thin wicks? The wicks represent the emotional extremes of that time frame. The tip of the upper wick is the absolute highest price achieved during that time, and the tip of the lower wick is the absolute lowest price. To make this dummy-proof, imagine a stock opens at $10. During the day, anxious sellers drag it down to $8. Then, aggressive buyers push it all the way up to $15, before it finally settles and closes at $13. Because it closed higher than it opened, it's a green candle. The body stretches from 10 to 13, and the wicks stretch down to 8 and up to 15. Congratulations, you've just completed step 1. You know how the candle is built. Now, let's look at what they actually mean. Step number 2 is reading the momentum. Now that you know how a candle is built, you need to understand its body language. In trading, size matters. The length of a candlestick's body tells you exactly how much power is behind a move. When you see a massive green candle with a huge body and almost no wicks, what does that mean? It means the buyers completely hijacked the market. They opened the door, started buying, and never looked back. That is pure, unadulterated upward momentum. Conversely, a massive red body means the sellers completely took over, crushing the price from open to close. But what happens when the body is incredibly tiny, or barely exists at all? This is what traders call a doji candle. A doji looks like a cross or a plus sign. It has long wicks on the top and bottom, but a razor-thin body in the middle. This is the ultimate sign of market indecision. The buyers tried to push the price up, the sellers tried to push the price down, and at the end of the time period, they ended up right back where they started. It's a financial tug-of-war where nobody won. When you see a string of massive bodies, you know a strong trend is underway. When you see candles getting smaller and smaller, it's a warning sign that the trend is running out of gas. Simple, right? Now let's combine anatomy and momentum into our final step, the one that actually makes you money. Step number 3 is identifying the rejection. If the body tells you who is currently winning, the wicks tell you who failed. This is where the magic happens, because wicks reveal future market reversals before they actually happen. Let's look at a very famous candle pattern called the hammer. Imagine a candle that has a tiny body at the very top, and a massive, long wick sticking out of the bottom. Let's decode the story here. When this candle opened, the sellers pushed the price heavily downward. It looked like a massive red victory. But before the candle could close, a wave of buyers stepped in. They aggressively bought up the asset, driving the price all the way back up to close near the top. That long lower wick is a visual scar of failed selling pressure. The market rejected lower prices. When you see a hammer candle form after a long downtrend, it's a massive psychological sign that the sellers are exhausted and a bullish upward reversal is about to begin. Now flip that logic upside down. Imagine a tiny body at the bottom with a massive wick pointing straight up. This is called a shooting star. Buyers tried to fly to the moon, but sellers stepped in and slammed the price back down to earth. That upper wick is a rejection of higher prices. If you see this at the top of a big rally, protect your capital, because the bears are taking back control. By watching the wicks, you stop guessing and start understanding market psychology in real time. And there you have it, reading candlestick charts as easy as 1, 2, 3. Anatomy: locate your open, high, low, and close. Momentum: look at the body size to see who has the power. Rejection: watch the wicks to spot where the market is flipping direction. Don't try to memorize 100 different complex pattern names you find on the internet. Just ask yourself every time you look at a candle, who tried to move the price, and who ended up winning at the close? If you want to practice this completely risk-free, I highly recommend using a free charting tool like TradingView to pull up your favorite assets and study these shapes. If this video made charts click for you, drop a comment down below with the word candle so I know you made it to the end. Don't forget to smash that like button, subscribe for more dummy-proof trading guides, and I will see you in the very next video. Happy trading!